David Burritt is the CEO of U.S. Steel and joins us now. Nice to have you here.
Great to be here. Thanks for having me.
Why did you do this deal to buy 49.9% of Big River?
This is a transformative action that we're taking right now. It gives us the best of the integrated mills and now the best of the mini mills. So in effect, we're combining the two types of businesses together and creating this type of footprint that will enable us not to just compete, but to win in the coming years. So this is a very great transaction for us because we're now being thought of as a technology company because of what we get with Big River, which is high-tech, best of breed, and the mini mill business.
Now, some would say, well, what took you so long? I mean, the mini mills have grown in capacity, I think, from some 15% to as much as 70% since 1970 in terms of steel output. I believe you guys haven't built a new hot strip mill since 1965. Shouldn't you have moved a little faster?
Well, maybe you heard it's a difficult industry, right? And
I have.
We certainly have made some progress. If you think about going back just a few years between the Great Recession in 2013, we were losing a couple $1 million a day. And now here we are investing for the future. Last year, for example, was the best EBITDA year since 2008. So clearly we're in a lot better path than we were before, a lot better place, and we're investing for the future. We've invested here in the United States with a new electric arc furnace that'll be completed next year. We're investing in Europe with a Dynamo electrical steel line. We're investing in our hot strip mill in Gary Works and a state-of-the-art, by 2022, endless casting and rolling, best North American mill will be created, which has, again, the best of both, the integrated and the mini mill technology, and that'll happen, we'll complete that in 2022. So with Big River and what we're buying talent, we're buying expertise, and we're creating this relationship that, again, creates the best of integrated mills and the best of mini mills.
Well, as you mentioned, you come off a strong year last year. We had the introduction of the 232 tariffs put in place, I think it was March of 2018. The price of steel went up. The industry benefited. But this year has been a very different story as demand has declined. And I believe steel prices are below where they were prior to the 232 tariffs.
They certainly are.
So how tough is it out there right now? We just got an ISM manufacturing number that didn't look very good either.
Well, it is a difficult time. The geopolitical issues overwhelm, in fact, the economy right now. And I think, obviously, we're going through a difficult time across the whole world as we find our way through what's going to happen here. Europe's struggling, of course, and the tensions between the United States and China will certainly continue for a time. But, I have to tell you, I'm extraordinarily optimistic about the future.
Why?
We'll get through this for U.S. Steel because we are, as I said, the best of both. But also, I do believe we'll get to more fair trade. We'll get to a USMCA agreement. There'll be an agreement with China, and we will get through this rough patch. And, there will be at some point an infrastructure bill coming. We need it. It will come.
We all know we need it, David. But
it
will, but not anytime in the rest of at least this term and or until the election, one would think.
Well, we'll see when it happens, but when it does, we'll be ready because we have now best of breed, best of integrated.
Right now you're dealing with a slowing auto industry, a strike at GM. I mean, the near-term future doesn't look very good.
We've been around for 118 years. We are a resilient company. We have a resiliency plans in place. We will adapt, and we'll do what's necessary to make sure that we have a good future. And with this investment, it's going to be even better.
And you are talking about it, achieving as much as $1 billion in capital and operational cash improvements by 2022 as a result of the deal. I wanted to ask you, you say through activities such as rescoping asset revitalization investments. What does that mean, asset revitalization?
We've had big investments in terms of revitalizing our assets and bringing them up to world-class type standards. And what we do over time is we reprioritize. So with this investment, we'll be able to dial that back, maybe $200 to $250 million more, to put in other priority assets to make sure that we get the best value for that. And we'll also look at other aspects of our business, including our iron ore assets, which have the low cash cost in North America. And so what we can actually do is for the excess pellets that we have, the taconite pellets there, we can monetize those assets over this time as well to create this opportunity. But From my perspective, I've been at U.S. Steel now for 6 years. I've never seen a better time than where we are right now in terms of where we're headed in the future because of these building blocks that we've put in place. Our balance sheet has been much better shape than before, and we have committed financing to do this deal with Big River. So
I understand that. And do you expect, as part of the deal, you have the option, obviously, to buy the remainder, the other 51% essentially of Big River?
Absolutely.
Do you expect that is going to be something that happens?
Absolutely. We see that we will consolidate this, and we're going to build capability with this. We're buying an organization that's highly entrepreneurial, and what they're bringing to the table is the high tech. And that's something that we'll benefit from. And we'll marry that up with the integrated mill, the best of breed at the integrated mill. Bring those together. So it's going to be a beautiful marriage ultimately.
The stock is responding positively today, and we can see there what you're paying, $700 million for that stake. But overall, a $2.3 billion enterprise value for Big River if and when you do, as you just said, take full control. But I'm curious, the stock is cratered, as has the market value of the company, as steel prices have dramatically declined. Yet you sit here very optimistically. What do you tell investors?
Well, we tell them about what a great investment this is. We tell them about what a great investment we have in Mon Valley, Pennsylvania, $1.2 billion that we're going to have in place for 2022. We tell them about the great technology investments that we're making in the hot strip mill in Gary, Indiana. So all of these investments are coming together, and over the next 3 years, we'll be in a lot better shape. We know how to weather storms, and we'll get through this.
Right.
But
again, for years, the industry had complained about cheap imports. That has ended, correct? That era is over, fair to say?
The era is not over until we get the fair trade agreements. We need USMCA. That will come, and the administration is working through those situations, and China has massive excess capacity. We have a level playing field. We'll compete with anybody. These issues will take some time. They'll get done. Meanwhile, we are investing for the future, and we're proving that we can actually have a good business.
Are you concerned at all that if there is some sort of agreement finally with China, that in fact steel will be a part of it in the sense of advantaging China again in some way or taking down these 232 tariffs?
Well, I can't really speculate what's going on. I'm not part of those negotiations, but I can tell you this. If we do have fair trade, it's better for us. Meanwhile, we're going to invest in the future and do what we do best, make steel.